Tuesday morning reports indicated the Qatar negotiations were ongoing. By Wednesday morning, updates suggested that $72 silver marked a timeline extension rather than the conclusion of the thesis. Tonight, 4 sources confirmed to a major international news agency that the United States and Iran agreed on a 60-day Memorandum of Understanding to extend the ceasefire, reopen the Strait of Hormuz, and start nuclear discussions. President Trump has not signed it yet, though the negotiating teams have reached an agreement. Silver closed the week near 75.8, up roughly 5% from Thursday's low. Those who held through 72 or watched from the sidelines saw this bounce. This week has been exceptionally challenging to maintain positions. Sunday brought optimism about a deal. Monday saw U.S. strikes. Tuesday involved a drone being shot down and an F-35 fired upon. The ceasefire was called a grave violation. Wednesday, President Trump threatened Oman on live television. Thursday, Iran struck a U.S. airbase in Kuwait, pushing silver from 76 to 72 within roughly 48 hours. Holding PSLV, or physical silver, through this likely tested many investors' confidence. Market fear peaked at 72, which historically has proven the correct entry point. April 7th ceasefire, April 28th, pre-delay movements on May 1st, all reflected the same pattern. Wednesday followed suit. Thursday evening, negotiators on both sides signed off on the 60-day agreement. Friday, silver rebounded to nearly 76. Recognizing this pattern is key to understanding future movements expected before August. The Memorandum of Understanding, confirmed by 4 independent sources, includes a 60-day ceasefire extension. The Strait of Hormuz will reopen to traffic. Iran has 30 days to remove mines from the shipping route. Iran pledges not to build a nuclear weapon. The United States will discuss sanctions relief and the unfreezing of Iranian assets. Existing Iranian-enriched uranium stockpiles, the missile program, and proxy militias in Lebanon, Iraq, and Yemen remain unresolved, deferred to the 60-day negotiation window. This is a structured pause, not a full settlement or normalization. President Trump has not signed. J.D. Vance told the BBC Thursday that the deal is close but not finalized. An Iranian semi-official news agency confirmed the agreement has not yet been ratified on their side. Negotiators are aligned, but political leadership is not formally signed. The market is pricing this gap around 75 to 76 silver. Registered deliverable silver in the COMEX vault stands at 84.1 million troy ounces as of May 28th. This is up 3.2% in a single day and 11% over the past 30 days. Prior figures were based on earlier data and are now outdated. Total open interest across all COMEX silver contracts is 58.6 million troy ounces. Paper leverage is 6.1 times for every ounce of registered deliverable silver. The coverage ratio sits at 16.5%, above the 15% stress line. The June 2026 contract, now in its delivery period, has generated 1,653 contracts standing for delivery, representing 8.3 million troy ounces. The current figure of 1,653 contracts standing for delivery represents only the opening stage of the delivery cycle. That number will continue increasing as the delivery period progresses. The final delivery count for May 2026 reached 6,414 contracts. That equates to 32.1 million troy ounces. This revised total exceeded the mid-month figure reported earlier in the week. The data has been confirmed through Gold's. AI. Attention is now shifting toward July 2026. June is approaching its conclusion, and July becomes the next major delivery month under scrutiny. As of May 28th, open interest for July stood at 71,614 contracts. That represents 358.1 million ounces of possible delivery demand. First notice day is 22 days away. With registered silver currently at 84.1 million ounces, available supply covers only 23% of that potential July requirement. According to the Gold's AI delivery pressure snapshot, the ratio of delivery demand to registered inventory stands at 426%. The methodology classifies this level as extreme delivery pressure. Importantly, this assessment relates to July rather than June. The rise in registered silver from 81.7 million ounces to 84.1 million ounces became a significant development this week. When silver declined to $72 on Thursday, registered inventory increased by 2.6 million ounces in a single day. That movement indicates metal was transferred into the deliverable category. During a period when paper prices were falling, the Memorandum of Understanding remained uncertain, and an airbase had been attacked. The entities moving metal into deliverable inventory were not speculative traders. The activity came from producers and commercial participants preparing to meet futures delivery obligations. The replenishment of registered inventory during a sharp paper price decline signaled that physical demand remained intact. Rather than weakening demand, the price drop confirmed its presence. Looking ahead, two different scenarios emerge depending on whether President Trump signs the memorandum. If the agreement receives a signature before Monday's Globex opening, the immediate reaction in paper markets would likely be a higher opening gap for silver. A comparable example occurred following the April 7th ceasefire announcement, when silver moved from roughly $73 to $77 during the first trading session. A signed memorandum represents a similar catalyst. The 30-day timeline for clearing mines in the Strait of Hormuz begins from the date of signature. Industrial procurement managers who have been standing for COMEX delivery because Hormuz was unavailable would begin incorporating that timeline into their planning. Some July delivery demand could shift into later contracts while participants wait to determine whether the 30-day clearing period is successfully completed. However, market sentiment would likely be reflected in the opening price movement before physical adjustments take place. If no signature arrives this weekend and the unsigned status extends into next week, silver would likely continue moving within a $74 to $77 range, while volatility remains elevated. Every new headline would be interpreted either as evidence of imminent approval or as another delay. Meanwhile, the underlying July delivery picture remains unchanged. Open interest remains at 71,614 contracts, equivalent to 358.1 million ounces, with first notice day only 22 days away. That delivery demand continues building beneath the paper market regardless of any decision made by President Trump. The structural requirement is tied not to the memorandum timeline, but to the ability to source physical silver outside the COMEX system. As long as mine clearing operations in Hormuz have not been completed and supply chain disruptions continue, industrial procurement managers have an incentive to remain in line for COMEX delivery. That demand continues accumulating regardless of developments surrounding the memorandum. Separate data from metal charts. Org supports the same broader trend. Registered silver inventory has been declining structurally since October 2025. Holdings have fallen from more than 113 million troy ounces to the current 84.1 million. Even after the recent 30-day replenishment of 8.3 million ounces, the registered category remains approximately 25% below the level that existed when this conflict began. The 30-day increase in inventory occurred during the same period that May delivery obligations were being settled. This suggests that commercial participants likely rewarranted existing metal to satisfy May delivery requirements, rather than introducing entirely new supply into the system. Gold also deserves attention within this broader picture. The metal finished the week near current levels and maintained what has become a structural floor between $4,400 and $4,450. Gold has neither surrendered its conflict-related premium nor surged higher following the memorandum news. That combination carries significance. The market is neither pricing a fully completed agreement nor preparing for a total breakdown. Current pricing behavior suggests institutional participants view the memorandum as carrying roughly a 60% probability rather than complete certainty. If a deal were fully priced in, gold would likely surrender between $200 and $300 of its conflict premium. If negotiations were to collapse entirely, gold would be expected to move sharply higher. The current gold price reflects a deal agreed by negotiators, but not yet signed by the president. Once President Trump signs, gold will give back part of its premium, and silver is likely to rally more strongly. That rotation typically compresses the gold-silver ratio from its present level near 58 to 59 back toward the long-term historical mean of 68 to 72. All data has been independently confirmed. Kevin Wersch has been Federal Reserve Chair for 13 days and has observed this week's compression and rebound without issuing any forward guidance that would suppress either gold's safe haven appeal or silver's industrial demand. That approach is deliberate and remains a significant structural factor in the metals market for 2026. The instrument breakdown is straightforward. Physical holders who maintained positions through $72 are positioned with the least delivery risk and the strongest underlying demand. The July delivery structure includes 71,614 contracts against 84.1 million ounces of registered silver. Decisions now involve whether to add before Trump's signature or wait for confirmation. Both are rational choices. Selling physical silver tonight before a 60-day Memorandum of Understanding and with July 1st notice, day 22 days away, and a delivery coverage ratio of 16.5% is not rational. For PSLV holders, the NAV discount that widened Thursday during the drop to $72 is partially recovering. Silver at $75.8 is closing the gap. The remaining discount will narrow further once the memorandum is signed. Physical metal at the Royal Canadian Mint in Ottawa has not changed this week, but share prices tracking it have. Holders are maintaining a claim on physical metal at a discount to intrinsic value, which will close with a signed memorandum. For SLV, the key metric over the weekend is Monday's Globex open relative to Thursday's close. If silver gaps higher Sunday night, the memorandum has either been signed or is imminent. If it opens flat or lower, the president has not signed, and the market price is in further delay. The gap direction Sunday night is the first signal. AGQ holders should pay particular attention to position sizing for the next 72 hours. A signed memorandum at Sunday's Globex Open could produce a 4 to 6% overnight move in silver. AGQ amplifies this by 2 times. A Monday open without a signature could extend range trading with elevated volatility. Prepare position sizes and know maximum drawdown tolerance before Globex opens, then observe the market. Over the past 3 months, the market has offered a real-time case study of physical commodity interaction with geopolitical events. March delivery, April 1st notice day, May delivery at 6,414 contracts totaling 32.1 million troy ounces, the current June delivery building at 1,653 contracts, and July structure at 71,614 contracts with first notice day 22 days away, all confirm the physical demand thesis. Every paper price collapse from $117 to $60 and back to $76 has been absorbed by the physical pipeline. Tonight is the start of the 60-day chapter, determining whether supply chains normalize or new disruptions extend the timeline. The thesis is rooted in delivery data, not diplomatic headlines. After the most challenging week of the year, delivery data continues to confirm the trends observed since February. If any of this week's framework helped you maintain positions or understand market behavior during widespread panic, note that in the comments. Community feedback informs understanding and improves analysis. The group tracking this story is among the most intellectually honest market observers encountered in years. An alert video will be released the moment Trump's signature is confirmed. For those following the full July playbook, it includes specific threshold levels, watch numbers, and a 6-instrument breakdown for the 60-day memorandum window. For the public overview, this provides the complete picture. The Globex alert is expected this weekend. Market prices are live and moving. All data reflects publicly available information as of May 29th, 2026. Verify each figure independently before acting. Links to sources are provided. This content is educational analysis only, not financial advice. Please leave your thoughts about this content in the comments below. Thanks for watching. See you in the next one.